Hello, this is Vance, and this is Friday, August 16th, 2014, and these are the CL trades for today using the slow hand method for price action. Well, I was on here this morning, talked about the pre-market, talked about the fact that markets oversell. Let me talk a little bit about that. What I mentioned yesterday, and let's take a look at the 1440 minute chart. Okay, let's pull it over here. This is 1440 minute daily chart. It's a chart that we've been looking at, and again, the reason I was looking at this in the first place is because to give you an idea of, the 800 tick chart just doesn't cover this many days. You can't go back this far. It's going to last August. This is a year, so it's really tough to kind of go back. And it's not because I'm setting strategy based on this chart. That's not the case. But what I want to do is kind of show you where price has been and give you some idea of the length of time price can move in any given marketplace when you look at a long-term chart. Al Brooks talks about the fact that when you take a look at any chart, whether it's a tick chart, 5-minute chart, whatever it may be, it doesn't matter what the time frame is. If you take away the time and you take away what the instrument is, there is no difference. You can see the price action, whether it's a 1-minute chart or whether it's a daily chart or a weekly chart, whatever it may be. If you look at those charts side by side, you can't tell the difference. I mean, and he's adamant about that. In this case, I was talking yesterday about this area right here, and one of the things I was talking about was the fact that over the last few sessions, this was an area that where we had some resistance, like a tight trading range, price trades down, and then we fall into this area right here. And this has been over the last few sessions, except for Thursday. And Thursday we had this big drop down here, and I was talking about this area. And what I mentioned the fact was that when markets sell, when they sell off, when they start selling off, they always sell off too much, generally speaking. And I said that yesterday, what I was looking back is two options. And so that's what I was saying. I said that when we were down here, I said prices, so we had come off this fairly strong downtrend on Thursday. And when we got to this area right here in the overnight session, and I was on here right here, I was talking about the price has two options, and it always has two options. Now, tight trading ranges, the price is going to, like a spike and challenge, is going to stay the same. But I also mentioned that typically markets always oversell. Now, the momentum could have carried it lower, but when the bell happens, of course, everything comes to kind of a stop. Takes a breather, everything resets to some degree. People oil traders sitting around their oil trading desks thinking about, is the price of oil too far down? I mean, what time is a good time to buy in? And is this a long-term measure? Is this going to happen? Is this permanent? It's not going all the way down to zero, but at the same time, the markets can be wrong longer than you can stay liquid. However, when it got down to this area, and I was talking about this yesterday, I was looking for, my bias was more towards some type of rebound or some type of retracement. And I don't know how long the retracement is going to be, but that's what I was really kind of looking for. Again, but that was plan A. Plan B was to say, well, we can continue to sell off. So I'm looking for that as well. But in the overnight sessions, look at the tight trading range that we had. We didn't really have a lot of movement up or really down. So as a result, maybe it looks like the downtrend is maybe running out of steam after it had the overnight pause. This brings us to today. What happened? Well, here we have this the price pulls back to the EMA, pulls back, and I didn't have this trend line in there yet. I had it off these tops right here. Double it, bring it down here. So this was a reasonable trade. It's not right at the bottoms, but I think that we've already tested the bottom because we've had this, we've had these matching lows down here. Price can't stay down. We had this move up. So that at the very least, you're looking at, I was thinking that you had this move up here. First pullback, second pullback, and I'm thinking that maybe there'll be a magnitude of another move up here. And so we are close to these double tops here, maybe this one here. It gives us a little bit of room. This is your 15-tick stop box, and the reason it's so small. So there was barely enough room to get it, so that's why I marked it in green. Price breaks out. Now he falls back. We pulled back. We have the double bottom here. Makes it goes up, tests first time, tests the second time, comes to the bottom. So now, trading range says that we've got a test here. We've got this first test, second test at the top, another test down at the bottom. And so that means that we're basically in a tight trading range. Try to buy in at this area. Now, I marked it in green because it didn't have a close. It's a doji, It's a bear doji, and when it closes, it's a strong bear bar, but you probably had to limit in on this one, and that's the problem. And the other thing is to keep your stop below here. It didn't reach, so I mean, if you're, you would have to see below the closes, but not below the test on this one. So that's why I marked this one in green. That's more of an aggressive stance, because I'm thinking that we're going to come back up here. Where's the next reason? Like, we're still off quite a bit. Another pullback. Price makes a new high. We have the first pullback, fails. It comes all the way back down to here. Another place to get in. I marked this one in blue. I was more confident on this trade. And even though it's like this overlap, because now we're talking a tight trading range, you get in low. You have to, again, it's another limit order. You got to buy in low on this on a trade like this. Your stop is down here. Again, it's above this doji, so went back and forth. You can almost say this is a green trade, and it really moved out here fairly rapidly. Kept within this channel, makes a new high, breaks down here the first time, fails, breaks down here the second time, and now I'm looking for more like a measured move. But the measured move that I've got is a pretty steep, was a pretty wide one. So if this is the move right here, we have the first pullbacks here. So I was thinking that's a big measured move. So it may be more like this. So we had this first move up, first pullback, second pullback, and right to here. And you can see that price, that was really what probably held more than anything else. So once this broke up here, I was looking for at least a move up to this area. And you can see it almost got there. Now, anytime price came back to the EMA, came back to the trend channel, it seemed to be that was a place to really try to get in. So you try to get in each individual area, and by the end of the day, we did have some failures. I'm not saying there's no shorts here. I mean, this is like first move up, second move up. You can consider this a short too, but given that we had this movement so far, and given that we had the sell-off from yesterday, I wasn't looking at shorts. I mean, even though these are pretty decent short setups, I mean, look at, I'll give you an example of this one. You had this move up here, pulls back. We have another move up here. There's a double top at this area. I mean, it's almost like two legs up and then maybe a short. It's above the EMA, however. That's kind of a little bit of a problem. But if you look at shorting anytime up this area, it's not a bad. These are pretty wide swings, so it's not a bad. It wouldn't have been a bad trade. But a very aggressive trade. That's what I'm thinking as far as that's concerned. See this move up here? Again, here's a move up here. First move up. We had the pullback to here. Pullback twice, basically. So it was certainly a uptrend day, and you can see where we finished up. Where did we finish up? Very close to what the overnight high was yesterday. The overnight high yesterday was 97.59. We got to 97.41. So you get just a big retracement all the way back, almost to the real top. Certainly in that tight trading range that I talked about on Wednesday with that report. And again, lastly, to see how price pulled back down. Now we're right here. What Monday holds, see what the weekend transpires, and go from there. So that's it. Pretty interesting day. It was an uptrend day, an uptrend day followed by the downtrend day yesterday. That's something you could see that the retracement actually happened. I hope you got on the right side of the trade and stayed with it. It was, just stick with the trend even later in the afternoon. This is just before noon. Couple of setups here to buy in low. Remember, tight trading ranges. You try to buy in low, sell at the highs. I wasn't really interested in selling at any of the highs today because once price broke up through here and started in this movement, particularly this movement right here, it could trade all the way back down, but it just didn't. It couldn't find that momentum, couldn't pick up that support, and I was just and that's what I based these trades on here. So anyway, that's it for now. If you have any other questions, please let me know. This is Vance. Bye for now.